Hey YouTube, Jason here with DayTradingFearless. Welcome back to my channel. If you're new, welcome. Make sure you guys like and subscribe. And as always, let's jump right into it. So right now we're looking at mRNA. This is a kind of the momentum trading that I've been doing lately. And there's a couple things to look at. And hopefully this will help you guys. They're not necessarily have to be penny stocks. Could just be anything that moves, that has momentum, where there could be short coverings. But essentially, they're patterns that I personally like to look for, right? So I see prices kind of moving higher. We have a high here, a lower high, a lower high, right? If we break above this high right here, okay, look at that. Look at how price just came right to this level and pretty much stopped on the penny, okay, and reversed. I'm actually going to be looking for probably a move higher above here, and then we'll probably find this is a next support level. But if we break above this level, this 74, 71, 70, 475 level, I think price could actually run maybe another dollar higher, because this is kind of, think of it as a bull flag, right? Flagging out, breakout of the bull flag. It's more of the pattern. So the way I like to trade these things are a couple ways, right? Either look for the breakout, like what we're doing now. Okay, I'll zoom in, and then maybe look for a pullback, okay, to get long, because we've now made the higher high, but maybe look for a pullback. And these are 2-minute charts that I personally like to use. So what I might do is try and look for a pullback to about 50%. So we'll see. This is the previous candle. This is my code. You're going to see all this update, and I'm going to be looking for probably the 50% level, but we also have the 9 period from a 1-minute chart. I use kind of like a 6 period or 5 period on the 2-minute, which kind of duplicates, but we also see the spread down here, okay, and look at how price kind of came right back down. But I'd be looking for maybe a little lower, like around the 45 level. There's the 45. Let's say I kind of missed it because I was talking, but let's say we entered at 45. We would have already had our 10 cents potentially, because we're right here up at 40 or the 55, and our stop would have just gone 1 or 2 pennies below this at 42 was the low, right? This is what I'm looking at, the high, the 50%, and the low, right? And here is that code. So we could have gone long at 44 because we got down to, I believe, 43. And would we have gotten to 55? No, let's see. Let's see if this trade would have worked out. Again, this is what it would look like. I'm not going to take it because I missed it while I was trying to do this video, but it happened so quick. But I just want you to see, wait for the breakout sometimes, and then the pullback and the retracement, and try and find the most relevant place to actually be a buyer where it gives you the least amount of risk. Because if we got in, we'll say 45, we know the low right here, 70, 42s are low, so we would just make maybe 40, go 2 cents below. So we would have had 5 cents worth of risk to make a potential 10 cents, right? And if you do 10 shares, it's $1. If you do 100, it'd be $10. If you do 1,000 shares, it'd be $100, right? It's all relative. So now, look at what price has done. We now have a higher low, right? So we could, if we had our stop in, we could say, hey, let's move it up or leave it. But here we would have been stopped out. But again, maybe we got the 10 cents. And when price stalled earlier, when it first jumped, I would have actually been real hesitant, just kind of maybe wait and be patient and see what would happen with that trade, right? So now or maybe take profits a little early. Now, with that being said, we're now in a waterfall, right? 1, 2, 3. So if price breaks back up above, I would maybe look for a potential long on any type of pullback based off the 2-minute charts, right? Here, let's say we want to look for a short, right? Maybe I would look for a retracement back up here, maybe back to the 50%, knowing my stop would go 1 penny above this candle's high, right, to do a short, and I could see the high 70.59. So essentially 70.60 would be my exit. Okay, so maybe I would come in here, put an order in, maybe get short at 50 with a stop right above here. We have about 30 seconds left in this current candle. And what I'm going to look for is, I know the high right now of this candle, because it'll show you right here, the high, right, is 70.51. So what I might do is I might do like a 70.49, maybe a 48. Well, there it goes, too quick, right? Because time's about to enter here. Now, the hard part with these stocks are they have wide spreads, but let's say we entered at 49, right? Let's say, okay, we would have been probably stopped out because it goes up, right? But we would have only had a couple cents worth of risk. Now, the hard part is understanding the spreads, right? You got to be really, really careful of how to kind of trade these and understand how they work and things like that. But look at this. We might actually have a breakout to the upside, and now I'm going to be looking for any type of pullbacks, right? Maybe a pullback right back to this 44, because I know I could get, my stop would be below the 36, right? 35, let's say, right here, 44, kind of missed it because we had that quick little spike. Let's see if it holds up. But I'm not liking this setup, to be honest with you guys. I'm just going to kind of sit on my hands. But it's something to look at that, hey, you know your stop should be right below this low if you do get stopped out. I just don't like the big spread on this. Now, one way you could kind of trade this, and this is more of, just say, you probably can't do it with a lot of shares, but it's more of a small scalping technique with a wide spread. Watch this. I'm going to put an order in at 44, okay? And because I see we have like a 4 or 5 cent spread, right? So let's cancel this. Let's try and go. I'm waiting for the spread to kind of get wide, if that makes sense, right? I want to see a wide spread. And what I'll do is I'll maybe join the bid, and let's bring this down to, just for fun, because it's about a 3 or 4 cents spread, right? I'll click on join bid, right? But I'll wait for this to maybe get a little wider. Boom. 46 by 48. Again, I'm just, and this isn't something you could do a lot with, like here. And look, it kind of shot up real quick. So, or I could say, hey, let me do this, and I know my stop is going to go right below the low of 42, so we'll just say 40. Okay, and if we could get a pullback just based on the spread, and let's look for a nickel on this, right? Again, I'm just doing one share, just more for the education side of it. I don't want people going, wow, look at all the money you're making, stuff like that. But it's more educational, right? It's very kind of saying there, and look at that. We just got filled on the upside, right? And we collected a nickel on that. But with that being said, now if I did 100 shares, I would have gotten filled and made what, $5, whatever, right? But it's all educational purposes for why I'm doing it. Now look at how wide the spread is again, right? Maybe try and get filled here on the spread, right? And maybe try and get filled on the upside with the spread, knowing that my stop should be right below this 40 or whatever, right? So now I can always drop my spread down to here if I want to get maybe try and get a better fill. And look, I got a better fill, right? So just things to kind of think about and go from there with. So I hope this video has kind of helped you guys out. I hope you guys could kind of learn a little bit of different strategies and things to play with. And as you could see, Thinkorswim is having issues. But with that, I hope that helps. And until next time, we'll talk to you soon.